This is the Daily Market Comment by Rafi Boyajian. I'm Maria Bashardis. Thanks for joining us at xm.com. Money markets are continuing to price in a higher terminal rate for the Fed as anxiety builds of a possible upside surprise in this week's US CPI numbers. Fed fund futures swung sharply higher over the last week as investors ramp up their expectations of how high the Fed will raise interest rates. Hawkish remarks by a slew of Fed officials on the back of the hot jobs report and services PMI has sidetracked traders who until recently were ready to bet against the central bank. Investors seemingly misinterpreted Powell's perceived dovish tone in his post-FOMC press conference when the expected terminal rate dipped to 4.82%, only to surge back above 5% in the subsequent days. There is more to this week's jitters than just the hawkish Fed talk, as the January CPI figures will be the first to be calculated using new methodology. Moreover, upward revisions to December's prints have increased the possibility of the January report breaking the recent trend of softer than expected readings. 2- and 5-year Treasury yields maintained their upward path on Monday, but the 10-year yield eased off its highs from above 3.75% as European trading got underway, providing some relief to battered stocks. The Nasdaq Composite lost about 2.4% last week as the relentless rise in long-term borrowing costs hammered tech stocks that had been rallying recently. With the majority of big earnings releases out of the way, equity markets will be on standby this week for the CPI data, as well as upcoming Fed speakers' response to it. The US dollar was trading mixed on Monday as it extended its gains against a basket of currencies. But this came mainly on the back of a sharp dip in the Japanese yen, which tumbled across the board. The yen's rally on Friday faded after likely Bank of Japan chief nominee Kazuo Ueda voiced his support for the bank's ultra-loose monetary policy. The Japanese government is expected to confirm tomorrow who will be its next governor. In other currencies, the New Zealand dollar stood out, rising the most versus its US counterpart. The euro was trading near one-month lows, while sterling inched lower too, ahead of some key UK data releases this week, including employment numbers on Tuesday and inflation stats on Wednesday. This was today's Daily Market Comment. Thanks for joining us at xm.com.